Most traders lose money not because they lack intelligence, but because they cling to illusions. You see, the charts on your screen are not enemies, nor are they allies. They are simply mirrors, reflecting back every hidden fear, every unspoken desire, every stubborn belief you carry into the market. And here's the paradox. The harder you try to control the market, the faster it punishes you. The more desperately you chase certainty, the more chaos slips through your fingers. Yet, the moment you release that need to control, when you finally stop trading like a gambler and start thinking like the casino, that's when the real profits begin. Welcome to Trading Psychology Stick, where we dive deep into the mental game that separates consistent winners from everyone else. Quick disclaimer, this isn't financial advice, and I'm not telling you what to buy or sell. This is about understanding the psychology that drives every trading decision you make. Ask yourself this: how many times have you known what to do, but failed to do it? You had the perfect entry, the perfect setup, yet your hand trembled on the mouse. You moved the stop. You cut your winner too early. You let your loser run. Why? Because between the system you studied and the results you produced, there exists an invisible chasm, a gap that swallows most traders whole. This is the profit gap, and it has nothing to do with your charts and everything to do with your psychology. We're about to step into the casino of markets through 10 transformative chapters. We'll explore why markets are random but not chaotic, why your beliefs shape the very price you see, and why the only trader who wins is the one who learns to trade without fear. By the end, you won't just understand why you've been losing. You'll know exactly how to transform yourself from the gambler on the floor to the house that always wins. Chapter 1. The Profit Gap and the Illusions We Trade. Why is it that two traders can look at the same chart, press the same buttons, and end up with completely opposite results? One walks away with a pocket full of profit, while the other sinks deeper into loss. The answer is not in the system, nor the indicators, nor the news headlines. It lies in the invisible gap between what a trading method can potentially deliver and what the trader actually extracts. This is the profit gap, and it is the silent executioner of dreams in the financial markets. Imagine a young trader, wide-eyed and hungry, who discovers a system with a proven 60% win rate. He backtests it, paper trades it, even watches it produce profits for others. But when he takes it live, the numbers don't match. His winners vanish too soon, his losers spiral out of control, and the 60% edge shrinks to nothing. He feels betrayed, but the truth is, the system didn't fail him. His psychology did. The market is not a machine that rewards knowledge. It's a mirror that magnifies discipline, or the lack of it. Think of a basketball player standing at the free throw line. He has practiced that shot thousands of times. In an empty gym, he sinks them effortlessly. But place him in front of a roaring crowd, the clock ticking down, the championship on the line, and suddenly his hands sweat, his knees lock, and the rim seems to shrink. The skill is there, but the pressure changes everything. Trading is the same. Your technical method is the shot, but your psychology is the pressure. Without mastering your inner game, the external skill never translates into results. Mark Douglas called this obsession with winning the illusion of control. Traders believe that if they just learn one more indicator, one more strategy, they will find certainty. But certainty is a mirage. The market doesn't care how much you know. It only reflects how well you can execute your edge without fear, hesitation, or hope. And here's the first major illusion: the belief that markets are predictable machines. We draw lines on charts, we calculate ratios, we study patterns, all to convince ourselves that we can know what happens next. But the market is not a machine. It's a living organism of human emotion, constantly shifting, never fully knowable. The second illusion is that being smart equals being profitable. How many brilliant analysts do you know who can't trade? They can explain every pattern, every indicator, every piece of news, yet they freeze at execution. Intelligence without discipline is worthless in markets. The third illusion, perhaps the most dangerous, is that you need to be right to make money. This single belief destroys more traders than all technical ignorance combined. The need to be right creates the psychological conditions for every trading sin: moving stops, averaging down on losers, cutting winners early, revenge trading after losses. If you've ever felt this pressure, if you've watched perfect setups fail because you couldn't execute them properly, comment below with pressure and let me know your biggest psychological challenge in trading. The profit gap widens every time you cut a winner too soon, every time you let a loser run, every time you hesitate at the moment of truth. You are not competing against the market. You are competing against your own impulses, your own illusions, your own fear of being wrong. So ask yourself, how many times have you known the right move but failed to take it? How often has your trading journal looked like a record of mistakes you swore you would never repeat? That's the profit gap staring back at you. And until you close it, no amount of technical knowledge will save you. But here's the good news. The gap can be closed. And it doesn't start with the charts. It starts with understanding the true nature of markets, random, alive, unpredictable. Only when you accept this truth can you begin to trade with it rather than against it. Chapter 2. The random nature of markets and the living price. What if I told you that every single trade you take is nothing more than a coin flip? You might protest. But my system has rules, my charts have signals, my analysis is solid, and you'd be right. But here's the paradox. Even if your coin is weighted, you still cannot predict the exact sequence of flips. This is the cruel but liberating truth of trading. Every trade is random, yet over a series, patterns emerge that create your edge. Imagine a coin weighted so it lands on heads 70% of the time. Over 100 flips, with near certainty you'll see about 70 heads and 30 tails. But can you tell me whether the next flip will be a head or a tail? Of course not. It could land heads 5 times in a row, then switch to tails for the next 3. The distribution is uneven in the short term, but reliable in the long term. This is where so many traders lose themselves. They treat each trade like it must work, like the market owes them a win because their analysis was correct. They build elaborate cases for why the price must rise or fall. They tie their identity to a single outcome. And when the market does what it always does, defies certainty, they feel betrayed, as if the randomness itself were unfair. But the randomness is not the enemy. It is the very environment you must embrace to succeed. Now, let's go deeper. Price is not just random, it's alive. Price is belief, raw, collective human belief projected onto a screen. Every tick, every candle, every sudden surge or collapse is nothing more than millions of minds colliding in a single auction. And if you can't see that truth, you will keep treating price as something mechanical, as if it obeys your lines, your indicators, your predictions. Picture this. A stock sits at a major support level. Retail traders flood forums, whispering that this is the place to buy. Technical analysts point to historical data, Fibonacci levels, moving averages lining up. The energy builds. But across the city, a large institution is holding a meeting. A fund manager decides to liquidate millions of shares to rebalance a portfolio. One click, and that support evaporates like mist in the morning sun. It wasn't your lines that broke. It was human intention, layered in size and power, greater than yours. Mark Douglas reminded us that every price point is nothing more than agreement between buyers and sellers about what they believe the asset is worth in that instant. Tomorrow, those beliefs may shift. In 10 minutes, they may reverse entirely. You are not trading an instrument. You are trading the psychological consensus of everyone involved, from the smallest retail trader with $500 to the whale who moves billions before lunch. Think of a crowded marketplace. One seller raises his voice, apples for $5. Another shouts, $4.50. A group of buyers huddles, glancing at each other, deciding whether to jump. Suddenly, a wealthy merchant arrives and buys everything in sight, driving the price higher instantly. That's what price really is. A living negotiation, a tug-of-war of belief and urgency. Take a moment right now and think about your last 5 trades. Were you focused on each individual outcome, or were you thinking about your edge over the next 50 trades? If you're honest and realize you were obsessed with each trade, pause this video and write down this commitment. I will think in probabilities, not certainties. This simple shift will transform your trading forever. The wisdom here is profound. If you can accept randomness, you can finally free yourself from fear. Fear thrives on the illusion of certainty. What if this trade fails? What if I lose again? But if you embrace that every single outcome is unpredictable, those fears lose their teeth. You stop obsessing over the single trade, and you start focusing on the series. You stop gambling, and you start thinking like the house. Think of a casino. The roulette wheel has no memory, no agenda. Each spin is independent. Yet the casino knows the odds are tilted in its favor by just a few percentage points. Over thousands of spins, that small edge guarantees its survival and prosperity. The casino doesn't panic when a player wins 5 times in a row. It doesn't chase losses or double down in fear. It simply keeps spinning because it knows the math is inevitable. So, let me ask you, how different would your trading feel if you stopped needing to be right on the next trade? How much lighter would you feel if you let go of the obsession with prediction and simply played your edge, knowing that wins and losses are just parts of the same curve? Because once you accept randomness and see price as living belief, you'll stop fighting the market. And when you stop fighting the market, you'll be ready to confront the traps that sabotage every trader, the psychological quicksand that turns potential profit into guaranteed loss. Chapter 3. The need to be right and the mistakes it creates. Every trader starts with the same secret hope. If I'm smart enough, if I study enough, if I prepare enough, I will be right. And in the beginning, being right feels intoxicating. The market moves in your favor, your analysis proves correct, and you feel like a prophet who can see the future. But soon the market turns, and suddenly, you're not just wrong on a trade. You feel wrong as a person. Your ego is bruised, your identity attacked. And that is when the most dangerous trap in trading slams shut. The need to be right. Mark Douglas called this obsession one of the greatest psychological barriers a trader can face. Because the moment you decide that every trade is a test of your intelligence, your worth, your identity, you are doomed to self-destruction. A losing trade becomes unbearable, not because of the money, but because of the meaning you attach to it. Imagine an engineer at a major tech company, brilliant and meticulous, who spends weeks designing a new chip. When his design fails in testing, he can argue his case, gather evidence, fight for his idea, but the market doesn't care about your case. You can't persuade it with logic. You can't debate it into agreement. Yet traders do this every day, building long paragraphs in their heads about why a position must work, convincing themselves to hold as the market bleeds against them. The market doesn't hear. It only moves. And here's where the need to be right spawns the basic mistakes that kill accounts. Let me walk you through them, because I guarantee you've made every single one. The first, and perhaps the most unforgivable, is entering a trade without defining risk. Picture a soldier walking into battle without armor, without knowing where the enemy is, convinced he'll improvise once the bullets start flying. That is the trader who hits buy or sell without a predetermined stop. The market does not forgive improvisation. Without defining risk, you hand your survival to chaos. The second mistake is moving your stop loss. You place it with confidence, telling yourself you'll stick to discipline this time. But as the market approaches, fear whispers, just give it more room. It'll turn back. You slide the stop lower, convincing yourself it's rational. But this is lip service to discipline, nothing more. You are not following your rules, you are betraying them. And the market punishes betrayal swiftly. The third mistake is hesitation. You see your setup, you know the conditions are right, but your hand freezes. Fear of loss, fear of being wrong, fear of stepping into uncertainty paralyzes you. The trade runs without you, and now you are chasing, entering late, sabotaging your edge. Hesitation is not caution. It is the death of opportunity. Then comes its evil twin, jumping too early. FOMO, the fear of missing out, drives traders to lunge into setups before confirmation, before the plan says it's time. They treat the market like a train about to leave the station, desperate to be on board at any cost. But trading is not about catching every move. It's about catching the right ones. The fourth mistake is cutting winners too soon. The market finally moves in your favor, but instead of letting your edge play out, fear whispers again. Take it now, before it reverses. Don't let them take it back. You close early, pocketing crumbs while leaving the banquet untouched. Over time, this destroys the mathematical advantage of your edge. And finally, the deadliest mistake of all, letting a winner turn into a loser. This is greed and hope conspiring together. You refuse to lock in profit, convinced the market will give you more, blind to the fact that the only guarantee in markets is uncertainty. The trade reverses, profit vanishes, loss grows, and you are left staring at the screen, sick with regret. Here's something you can try right now. For your next 10 trades, don't track whether you were right or wrong about direction. Instead, track only one thing. Did you follow your process? Mark each trade as either process followed or process broken. You'll be amazed how this simple shift changes everything about your trading psychology. Here's the core truth. These mistakes are not about skill. They are about psychology. You know better. Every trader does. Yet knowing is useless without the discipline to act. The amateur believes knowledge alone is enough. The professional knows that execution is everything. But even when you know the mistakes, your mind has ways of protecting you from seeing them. Defense mechanisms that feel like shields, but are actually prison walls. And until you recognize them, you'll keep repeating the same patterns forever. Chapter 4. Defense mechanisms and self-sabotage. When the market hurts us, our minds rush to defend us. That's what the brain is designed to do. Protect us from pain, shield us from fear, soften the blow of reality. But in trading, these defense mechanisms, while comforting in the moment, are the very forces that ensure we repeat the same mistakes again and again. They are the invisible walls keeping you trapped inside the cycle of loss. The first wall is selective perception. You look at the chart and, without realizing it, your eyes filter only what supports your belief. If you're long, you'll notice every bullish candle, every breakout pattern. If you're short, you'll magnify every bearish sign. Meanwhile, the evidence against your position stares you in the face, and you don't even see it. It's not that the information isn't there, it's that your brain refuses to acknowledge it, because to do so would mean admitting you could be wrong. Then comes rationalization. You entered a trade that's bleeding red, but instead of cutting it, you tell yourself stories. It's only a pullback. The market is overreacting. This news doesn't matter long term. The human mind is a master storyteller, inventing logic to justify emotions. But every second you rationalize, you sink deeper into loss. The third defense is denial, pure, raw refusal to face the truth. Your stop is hit, but you delete it. You watch price crash through your level, and instead of exiting, you whisper, "It'll come back." Denial feels safe in the moment, like a blanket shielding you from cold reality. But denial in markets is fatal. It turns manageable losses into catastrophes. And then, the most dangerous, emotional hijacking. Fear floods your system. Adrenaline spikes. You are no longer trading your plan. You are trading your survival instinct. Every tick feels like an attack. You smash buttons, double down, revenge trade, desperate to win back what you lost. In these moments, you are not a trader. You are a cornered animal. Finally, there is the frozen state. Losses mount so high that you go numb. Your hands won't move. Your brain shuts down. You sit paralyzed, watching as your account bleeds to death. You are neither fighting nor fleeing. You are simply waiting for the inevitable. It's a kind of death spiral, a silent surrender to the market's blade. But beneath these surface defenses lie deeper saboteurs, beliefs about money and self-worth that you inherited long before you ever saw a chart. These are the true puppet masters of your trading. Some traders carry self-worth issues. Deep inside, they believe they don't deserve success. When profits arrive, instead of embracing them, they unconsciously sabotage, overtrading, breaking rules, giving money back. Because success feels unsafe, unearned, the account balance becomes a mirror of unresolved wounds. Others struggle with moral conflict. They've been told their whole lives that making money quickly is gambling, that profit without hard labor is wrong, even sinful. So when they trade, a war rages inside. One part seeks wealth, another part feels guilty for pursuing it. That conflict ensures inconsistency. Every win feels tainted, every loss feels deserved. Then there's childhood programming. Perhaps you grew up hearing, "Money doesn't grow on trees," or "Rich people are greedy." Those words don't disappear. They sink into your subconscious, shaping your relationship with wealth. So, when trading offers the chance to earn more than you ever imagined, those old programs sabotage you. You cut winners short. You cling to losers. You hesitate to size up, because somewhere inside, you believe money is dangerous. And perhaps the most insidious of all, the twin fears of success and failure. Failure terrifies because it threatens your identity. Success terrifies because it threatens your comfort zone. What if you succeed and can't hold on to it? What if others resent you? What if success changes who you are? These fears keep traders trapped in mediocrity, sabotaging every breakthrough. If you recognize any of these patterns in yourself, here's what you can do right now. Create a defense mechanism journal. Every time you catch yourself rationalizing, denying, or seeing only what you want to see, write it down immediately. Don't judge it, just document it. Then write down 3 beliefs about money you inherited from your childhood. Not what you think you believe now, but what you were taught then. Awareness is the first step to breaking these patterns. Here's the fundamental truth. Trading is not about learning the market. It's about unlearning your own limiting beliefs. You cannot trade beyond your self-image. If you see yourself as unworthy, inconsistent, conflicted, you will always trade in alignment with that picture. The market doesn't just reveal your edge, it reveals your deepest truths about yourself. Mark Douglas taught that recognizing these defenses is the first step to dismantling them, because what feels like protection is actually sabotage. The only way out is brutal honesty. Honesty about your emotions, your impulses, your beliefs. You don't trade the market, you trade your own mental state. So, let me hold the mirror. How many times have you caught yourself explaining away a bad trade? How many times have you sworn that the market was wrong, not you? Those weren't harmless thoughts. They were defense mechanisms, quietly building the cage you now sit inside. Until you surface these beliefs, name them, challenge them, and replace them, they will keep dragging you back into the same patterns. But once you strip away these defenses, you can begin to free yourself. And freedom is exactly what we'll discover next, the transformation from gambler to professional, from chaos to consistency. Close your eyes and imagine a roulette table in Las Vegas. The ball spins, the wheel clicks, and every player at the table is glued to the outcome. To them, this one spin is life or death. But look at the casino owner in the glass office above. He doesn't care if the ball lands red or black on this spin, or the next, or the one after that. He knows the math. He knows that over thousands of spins, his tiny edge guarantees he always wins. That is the difference between the gambler and the professional. And that is the essence of probability thinking. Mark Douglas taught that every trade is random in isolation, but meaningful in aggregate. The amateur asks, "Will this trade win?" The professional asks, "If I take the next 20 trades according to my rules, will the edge play out?" This is the shift that transforms trading from gambling into business. You don't judge yourself by the outcome of one roll of the dice. You judge yourself by how faithfully you executed the system over the series. Think about this. A system with a 60% win rate could easily lose 5 times in a row. To the trader obsessed with being right, those 5 losses feel like disaster. He panics, abandons the system, and destroys his edge. But to the probability-minded trader, those 5 losses are simply part of the distribution. He knows that over 100 trades, the math still leans in his favor. He keeps going, calm, methodical, like the casino spinning the wheel. Here lies the key insight. Consistency comes not from controlling outcomes, but from embracing inconsistency. Every trader dreams of smooth equity curves, but the reality is jagged, unpredictable, full of drawdowns. And yet, within that chaos lies order, if you can think in probabilities. And this probability thinking leads directly to what Mark Douglas called the carefree state of mind. Imagine walking into that same casino with a pocket full of chips, sitting down at the slot machine, pulling the lever, and then leaning back with a smile, because you already know what most traders never accept. The outcome of this spin doesn't matter. It could be a loss, it could be a win, but either way, you are untouched. That is the carefree state. It is not indifference, and it is not recklessness. It is freedom. Freedom from fear, freedom from the need to control, freedom from the crushing weight of expectation. The carefree trader is not careless. On the contrary, he is meticulous, disciplined, prepared. But once the trade is placed, he releases it into the stream of randomness with no emotional strings attached. He does not obsess, he does not pray, he does not clutch at the screen, waiting for the market to validate him. Picture a river. The amateur jumps in, thrashing against the current, desperate to force the water to flow in his direction. The professional sits on a raft, letting the current carry him, steering only when necessary. That raft is the carefree state. It allows you to flow with the market instead of drowning in it. The paradox is this: the less you need the market to give you a specific result, the more consistent you become. When you cling to expectations, this trade must win, this level must hold, you tighten your grip, and fear takes over. Fear of loss, fear of missing out, fear of being wrong, and fear leads to sabotage. But when you let go, when you accept uncertainty as the air you breathe, you stop fighting. You trade with flow. Carefree state doesn't mean you don't care about money. It means you no longer let money define your emotional state. You have risk predefined. You accept the cost of entry before you press the button. You have already paid the price of admission. What happens next is simply the unfolding of probability, and in that acceptance lies peace. Before we move on, I want you to really internalize this. Write down your win rate, then calculate exactly how many losing trades in a row are statistically normal for your system. If you have a 60% win rate, 5 losses in a row will happen. Knowing this intellectually and accepting it emotionally are two different things. Which one are you? Comment below with your win rate and how many losses in a row you're prepared to accept without breaking your process. A basketball player sinking shot after shot, not thinking, not doubting, just flowing. A musician lost in the rhythm, fingers moving without conscious thought. That is the state we aim for in trading. Detached focus, where fear cannot penetrate. The probability mindset is freedom. It frees you from the need to be right, from the fear of loss, from the intoxicating highs of a win. It centers you on execution. Did I follow my process? Did I take my edge? Did I play the game the way it was designed? Because if you did, the outcome of this trade doesn't matter. The next 20 will tell the truth. So, let me ask you, how many times have you sabotaged a trade because you couldn't stand the pressure of needing it to work? How different would your trading feel if each outcome carried no emotional weight? If win or lose, you remain centered, calm, and ready for the next opportunity. Because once you embrace probability thinking and the carefree state, you're ready to build the actual process of a professional, the systematic approach that turns chaos into consistency. A professional trader does not sit in front of the screen waiting for the market to confirm his ego. He does not waste time building elaborate cases for why price must go in his favor. He does not wrestle with doubt once the signal appears. The professional operates like a surgeon in the middle of an operation, calm, precise, mechanical. He has a process and he follows it without hesitation. That process is what separates the gambler on the casino floor from the owner who collects the chips at the end of the night. Mark Douglas broke it down simply. First, the professional recognizes his edge. He knows the conditions that signal opportunity, the setups that have positive expectancy. He doesn't need to predict the future. He only needs to recognize when the environment matches his edge. Second, he evaluates risk to reward, not right versus wrong, but cost versus potential payout. Every trade is just a business decision. Is the price of entry worth the possible return? Third, he executes, immediately, without hesitation, without adding extra stories. He trusts the math, he trusts his rules, and he acts. Fourth, he manages exits according to plan, predetermined stops and targets, no improvisation, no pleading with the market to bend to his will. Finally, he reviews and adjusts after a meaningful sample size. Not after one trade, not after 3, but after a batch of 20, 50, 100, because only then does the edge reveal itself. Picture a pilot flying through turbulence. The amateur clutches the controls, jerking back and forth, reacting to every bump of wind. The professional keeps his hands steady, following instruments, knowing the plane was built to handle storms. That's the difference. The amateur reacts to noise. The professional trusts the process. This is the profound shift. The market does not reward brilliance. It rewards discipline. You can be the smartest analyst in the room, but if you lack the ability to execute your plan without hesitation, your intelligence becomes your downfall. The pro knows that execution without emotional interference is everything. So, let me ask, how many times have you ignored your own rules in the heat of the moment? How often have you hesitated at the exact point your system told you to act? Those weren't market failures. Those were process failures. And until you honor your process above your pride, consistency will remain out of reach. The casino does not care who wins this hand or that spin. It only cares about running its process, because in the long run, the process guarantees profit. As a trader, your job is no different. You are not here to be right. You are here to execute. And once you accept that, you can begin to build the skills that make this execution natural, automatic, unshakable. You can train yourself from the ground up, closing the gap between knowledge and action until discipline becomes second nature. Chapter 7. Building Discipline from Ground Zero. Every trader dreams of scaling fast. Big trades, big wins, instant freedom. But the truth, the brutal truth Mark Douglas hammered into his students, is that you cannot skip steps. If your psychology cannot handle one share, it will crumble under 1,000. The path to mastery begins not with more size, but with building discipline at the smallest level possible, until execution becomes automatic. Think of paper trading. To most, it feels like a waste of time. Fake money, fake emotions, fake results. But in reality, it is a diagnostic mirror. Paper trading strips away the excuses. If you cannot follow your rules in a risk-free environment, what makes you believe you'll follow them when real dollars are on the line? Paper accounts reveal the mental gap between what you know and what you actually do. And until you close that gap, live trading is suicide. Mark often told his students, start with 10 shares, just 10. Forget about making money, forget about getting rich. The purpose is to build trust in your process. Can you enter exactly when your system says? Can you set a stop and leave it alone? Can you exit at your target without second guessing? These are the foundations. If you cannot answer yes at small size, you will not answer yes at big size. Imagine an athlete learning to lift weights. He doesn't start with 300 pounds on his back. He begins with the bar, learning form, training muscle memory, building confidence. Only then does he add weight, carefully, gradually. Trading is no different. Each small position is practice, each repetition wiring discipline into your nervous system. Gradual scaling is not weakness, it is wisdom. And here is the wisdom bomb. Perfect execution matters more than profit. In fact, profit at the beginning is irrelevant. Your only goal is to prove you can follow your rules flawlessly, no matter how small the trade. Because once you can execute perfectly with 10 shares, you can do the same with 100, 1,000, 10,000. But if you scale before you are ready, the market will expose every crack in your psychology, and those cracks will widen until they shatter you. Ask yourself honestly, have you ever increased your size just because you felt ready, only to watch your discipline vanish the moment the stakes rose? Did you blame the market, or did you see the truth, that your psychology was unprepared for the weight you placed on it? This is why Mark insisted traders expand their psychological comfort zone step by step. Comfort is not laziness. Comfort is the soil where discipline takes root. Stretch it too fast, and the soil tears. Stretch it carefully, and the soil expands, holding more and more, until one day you realize you are no longer the reckless gambler clawing at the market. You are the casino, steady, methodical, patient. Here's a concrete exercise you can start today. For the next 20 trades, use the absolute minimum position size your broker allows. Your only goal is perfect execution of your process. Track your execution score, not your profit. Did you enter at the right signal? Did you place your stop correctly? Did you manage the trade according to plan? Score yourself on execution perfection, not monetary outcome. This builds the neural pathways of discipline without the pressure of meaningful money. And once that foundation is built, you face the next challenge, managing the wild emotions that trading awakens and learning to scale your success sustainably. Chapter 8. Emotional Management and Scaling Success. If trading were only about charts, anyone with a calculator could become a millionaire. But trading is about emotions, wild, unpredictable, overwhelming emotions that surge through your body like tidal waves. And unless you learn to master them, they will master you. Mark Douglas warned, emotional management is not optional, it is survival. Consider euphoria, the sweetest poison in trading. After a string of wins, you feel invincible. Nothing can stop me now, you whisper, as you double your size, bend your rules, chase setups you would normally ignore. But euphoria is a liar. It whispers that the market bends to your will, when in truth, it is setting the trap. The fall from euphoria is brutal because it blinds you to risk until it's too late. Then there is overconfidence, a close cousin of euphoria. The danger here is subtle. It doesn't scream, it smiles. It convinces you that discipline is for others, not for you. You loosen stops, you ignore rules, you think you've evolved beyond the basics, but the market humbles everyone. On the opposite end is despair, the crushing weight of a losing streak. Every trade feels cursed. You second-guess signals, you hesitate, you sit paralyzed as opportunities pass by. Your identity bleeds into your losses until you feel like the market is not just taking your money, it's taking pieces of your soul. Depression creeps in, whispering that maybe you're not cut out for this. And in the middle lies the razor's edge, equilibrium. The professional's task is to stand on that edge, neither intoxicated by winning nor shattered by losing. Wins do not swell his ego. Losses do not break his will. He accepts both as natural parts of the distribution. Like a sailor adjusting sails in the wind, He adapts without emotional collapse. How does one achieve this? Mark Douglas suggested reset techniques, simple, deliberate actions to return to center. Step away from the screen, breathe deeply, walk outside, reconnect to the bigger picture. Review your plan, not your profit and loss. Remind yourself, one trade is nothing, the series is everything. This shift realigns your nervous system, pulling you back from emotional extremes. Here's where scaling becomes critical. Trading is not just about entering the market. It's about knowing when and how to take money off the table. The amateur dreams of catching the full move, of riding every trend to perfection. But the professional knows this dream is poison. Markets do not reward perfectionists. They reward those who know how to harvest profits consistently. Mark Douglas often said, "Take the money the market makes available, not what you hope, not what you demand, but what the market actually offers in the moment." This philosophy shifts your identity from desperate hunter to disciplined harvester. One of the most powerful tools is scaling out. Instead of holding your full position until the bitter end, you take partial profits along the way. At first glance, this may look like weakness. Why not hold for the maximum? But psychology is the true benefit here. Each partial profit locks in success, reduces fear, and builds the identity of a consistent winner. With each scaled exit, you are telling your nervous system, "See, I can win, I can protect, I can control my process." That psychological reinforcement is priceless. Consider Douglas's approach to trading silver futures. He would enter with a position, scale out as the market moved in his favor, and leave a runner to capture potential extended gains. This way, he never depended on the fantasy of catching the top. He secured profits along the journey, balancing realism with ambition. The wisdom bomb is this: scaling isn't about maximizing every dollar, it's about maximizing your longevity. The professional doesn't measure success by one trade. He measures it by how many trades he can take, consistently, over years, without blowing up. Scaling protects the mind as much as the account. Here's a technique you can implement today. Create an emotional reset ritual that takes exactly 5 minutes. Mine includes stepping away from screens, doing 10 deep breaths, reviewing my trading rules, and reminding myself that I'm playing a probabilistic game, not a predictive one. Then for scaling, use the rule of thirds. Scale out 1/3 at your first target, another third at your second target, and let the final third run with a trailing stop. This balances profit-taking with potential. What will your ritual and scaling plan be? So let me ask, how many times have you watched a winning trade evaporate into nothing because you refused to take partial profits? And how many times have you exited everything too early, only to watch the market soar without you? Both are symptoms of imbalance. Fear on one side, greed on the other. When you master emotional management and scaling, you build more than a strategy. You build a winner's mentality. You start to see trading not as a desperate grab for every penny, but as a disciplined practice of consistent harvesting. And that prepares you for the ultimate challenge, recovery from trauma and the integration of everything into mastery. Chapter 9. Recovery from trauma and the integration to mastery. Every trader carries scars. Some are small, a string of bad trades, a frustrating month, a missed opportunity. Others are deep, an entire account blown up, a fortune lost in a single reckless night, years of effort erased by one catastrophic mistake. These traumas don't fade with time. They sit in the body, in the memory, resurfacing every time you open a chart. Unless you learn to recover, to rebuild, those scars become chains that keep you from ever trading freely again. Mark Douglas spoke of the gutter principle, the brutal truth that some traders must hit rock bottom before they truly change. They must lose everything before they finally let go of illusions, ego, and denial. But here's the key. You don't have to destroy yourself to learn. You can face the lessons now without burning your life to the ground. Trauma is not a requirement, but for many, it becomes the wake-up call. Consider a trader who built his account to 6 figures, only to lose it all in a matter of weeks. The shame was unbearable. Friends whispered, family judged. He swore never to trade again. Yet, years later, he returned, this time not to chase glory, but to follow process. Slowly, carefully, he rebuilt. His scars became wisdom, his discipline unshakable. That is the power of recovery. Trauma can either kill you, or it can carve you into something stronger. The first step is learning without self-destruction. When you take a loss, resist the urge to collapse into shame. Instead, extract the lesson, write it down, own it without judgment. Losses are not personal, they are tuition, but only if you study them. The second step is rebuilding with humility. Start small, start fresh, as if you are a beginner. Shed the weight of your past identity. You are not the blown-up trader, you are the student who has learned what pain can teach. Humility creates space for growth. The third step is redefining identity. You are no longer someone who tries to win. You are a professional in training. Each trade is not a test of your worth. It is a practice of your process. With this identity, consistency becomes inevitable. History is full of traders who fell, then rose. Jesse Livermore, the legendary speculator, made and lost fortunes multiple times. Many of today's successful fund managers once sat in the ashes of failure. What separated them from the thousands who quit forever? They chose to transform trauma into discipline instead of into excuses. And this brings us to integration, the final stage. Mastery in trading is not a destination where losses disappear and charts bend to your will. It is a state where psychology, process, and intuition merge into one seamless rhythm. It is the moment you stop fighting yourself, stop fighting the market, and instead flow with it, like a surfer gliding on waves he cannot control but has learned to ride. At first, you trade mechanically, rules, checklists, rigid discipline. This stage is necessary because structure is what tames chaos. But over time, as discipline becomes habit, something shifts. You begin to sense the market's rhythm, to feel its currents beneath the surface. Intuition awakens, not as a reckless impulse, but as the subconscious expression of thousands of disciplined repetitions. Mechanical execution evolves into intuitive execution. But integration requires more than intuition. It requires simplicity. In a world drowning in indicators, news feeds, and endless data, the professional understands that more information does not equal more clarity. It equals confusion. And mastery is the art of subtraction, cutting noise, refining focus, keeping only what truly serves your edge. Simplicity is power. Another pillar of integration is personality alignment. The professional does not force himself into a trading style that conflicts with his nature. Scalpers who hate fast pressure will break. Swing traders who crave constant action will sabotage themselves. Mastery is matching method to temperament, so your process flows with who you are, not against it. The amateur obsesses over the next trade, the next week, the next month. The professional thinks in decades. He asks, can I still trade this way 10 years from now? Can my psychology, my lifestyle, my beliefs sustain this process for a lifetime? He builds systems, habits, and mindsets not just for profit, but for endurance. The wisdom bomb here is profound. Mastery is not about control. It is about harmony. You harmonize rules with intuition, simplicity with depth, ambition with sustainability. You stop swinging between extremes, fear and greed, euphoria and despair, and instead find a steady rhythm. You become the casino, patient and consistent, but also the artist, attuned to flow. So, let me ask, what is the story you are telling yourself about your losses? Are they proof that you're not cut out for this, or proof that you are being forged in fire? Have you been chasing mastery as if it were a finish line? Or can you see now that mastery is a state of being, a daily practice of alignment, a continuous evolution? Because once you accept that, you realize something liberating. You don't have to wait for mastery to trade like a master. You only have to begin living these principles now. The market was never your opponent. It was always your mirror. What you feared, it reflected. What you denied, it exposed. What you believed, it amplified. And in that mirror, you've discovered the only truth that matters. Consistency is not about conquering the market. It is about conquering yourself. Chapter 10, The Final Truth, You Are the Casino. We've come full circle, from the illusions that seduce every beginner to the integration that defines a master. And now, standing at the end of this journey, you understand the ultimate truth. You were never meant to beat the market. You were meant to become it. Think back to the casino we've referenced throughout this journey. The casino doesn't predict which number the roulette ball will land on. It doesn't know which card will be dealt next. It doesn't care whether red or black wins this spin. The casino simply knows its edge, executes its process, and lets probability work over time. Thousands of gamblers walk through its doors convinced they can beat the system. but the casino remains unmoved, patient, profitable. You are not the gambler anymore. You are the casino. Your edge is your system, tested and proven over time. Your process is your discipline, executed without emotion or attachment. Your house is your mind, trained to think in probabilities rather than certainties. Every trade is just another spin of the wheel, another hand dealt, another roll of the dice. Some will win, some will lose. But over the series, over the hundreds and thousands of trades, your edge manifests as surely as gravity pulls objects to Earth. The transformation is complete when you realize this. The market owes you nothing, not a single winning trade, not a moment of vindication, not a penny of profit. The market is simply an arena where beliefs collide, where fear meets greed, where human psychology plays out in price. Your job is not to conquer it, predict it, or outsmart it. Your job is to align with it, to flow with its randomness while maintaining your edge. Remember the profit gap we began with? That invisible chasm between knowledge and execution? It closes not through more information, but through this fundamental shift in identity. When you stop seeing yourself as a trader trying to win and start seeing yourself as a business executing a proven process, everything changes. The pressure dissolves. The need to be right evaporates. The fear of loss loses its grip. You become unshakable not because you never lose, but because loss is just part of the business. You become consistent not because you can predict the future, but because you execute your edge regardless of the last trade's outcome. You become profitable not because you're smarter than the market, but because you've stopped fighting it. The professional trader's mantra is simple. I am the casino. I provide liquidity. I take calculated risks. I execute my edge. I think in probabilities. I am unmoved by individual outcomes. I trust the math. I am disciplined in my process. I am patient with results. I am the house, and the house always wins. Not on every hand, but over every series. This is the deepest truth Mark Douglas wanted every trader to understand. The market is not your enemy. Your emotions are not your enemy. Even your losses are not your enemy. The only enemy is the illusion that you need to be right, that you need to control, that you need certainty in an uncertain game. So, let me ask you one final time. Are you ready to stop being the gambler desperately pulling the slot machine lever, hoping this time will be different? Are you ready to step behind the casino counter, to see trading as a business of probabilities rather than a game of prediction? Because when you make that shift, when you truly become the casino in your mind, your emotions, and your execution, that's when consistency becomes inevitable. That's when trading transforms from a source of stress into a professional practice. That's when you stop trying to beat the market and start flowing with it. You've just walked through the complete psychological transformation, from gambler to professional, from someone who fights the market to someone who flows with it, from a trader obsessed with being right to a professional focused on executing their edge. Think back for a moment. Remember the profit gap, the distance between what your system promises and what you actually achieve. Remember the randomness of outcomes, the coin flips that frustrate the gambler but liberate the professional. Remember the traps of ego, of needing to be right, of moving stops and rationalizing losses. Remember the defense mechanisms that protected your ego while destroying your account. And remember the breakthroughs, the carefree state of mind, the probability mindset, the disciplined process that transforms chaos into consistency. Every lesson you've absorbed here is a piece of that transformation, but knowledge without action is merely entertainment. The question now is not what you know, but what you'll do with what you know. Here's my invitation to you. Comment below with the one insight that hit you hardest. Was it accepting randomness? Was it recognizing your defense mechanisms? Was it understanding that you're not competing against the market but against yourself? Share it. Own it publicly. Because when you declare your lesson, you reinforce it in your mind and you inspire others who are fighting the same battles. And here's something concrete you can do right now. Choose one principle from this journey, just one, and commit to applying it in your next 20 trades. Not your next trade, but your next 20. Because remember, the edge only reveals itself over the series, never in the single outcome. If you're serious about mastering trading psychology, subscribe to Trading Psychology Stick. We go deep into the mental game every week, breaking down the invisible barriers between you and consistency. Share this with a fellow trader who needs to hear these truths before the market teaches them the expensive way. And finally, remember this one line. You don't need to predict the market. You only need to master yourself. If you take nothing else from this journey, let that truth echo every time you sit down to trade. Because once you stop chasing certainty and start embracing probability, once you release fear and step into discipline, you stop playing against the market and start playing as the market itself. The market will open again tomorrow. The same charts will appear. The same opportunities will present themselves. But you won't be the same trader looking at them. You'll be the casino now, patient, disciplined, aligned with probability rather than fighting it. Because mastery isn't someday. Mastery is your very next trade executed with discipline. Mastery is choosing process over prediction. Mastery is accepting that you are not here to beat the market. You are here to become it. The transformation begins now. Not with your next winning trade, but with your next disciplined execution. Not with perfect prediction, but with perfect process. Welcome to the 5%. Welcome to consistency. Welcome to trading in the zone.